Hey, good morning, everybody. Happy Monday. Appreciate you being here. Um, I'm sorry, I'm trying to monitor the notifications that aren't going out that are supposed to be going out right now. Um, oh, just not one thing, it's another. You know what I'm saying? So I appreciate everybody being here. Gonna just jibber jabber for a little while. Jibber jabber for a little while until people start jumping in, because again, notifications are going out really slow. How was your weekend? I hope it was really good. As always, my weekend busy, chocked full of stuff to do, and family stuff and work stuff and just stuff. So very busy. Hopefully you were with us Friday night, Crypto on the Rocks. If you weren't, we'll be back at it again this Friday night, 7 p.m. And if you missed after hours on Patreon, you missed a good after hours. That's all I'm saying. 100 Air, good morning. Appreciate you being here, sir. Appreciate that. Speaking of which, seeing 100 Air reminds me, I'm going to be putting together some masterminds on Patreon, and they'll also be delayed on my private Telegram channel and delayed on Odyssey, but live on Patreon. And I'm going to try and bring some people in. Matter of fact, 100 Air, I'll be reaching out to you to see if maybe we can coordinate having you on as part of that mastermind. So I'll reach out to you and I'll let you know about that. But I appreciate you being here today, sir, as always. So all right, we're going to start at this point because I'm not just going to keep babbling ad infinitum. Oh, you know what? Probably be a good idea if I actually turn some lights on so I don't look as bad as I look. Little things look worse than I look. How's that? Yeah, all right, we'll see. Yes, perfect. Thank you, 100 Air. Appreciate that. So I want to start out every one of these. Also, Joe, he's still having technical difficulties with his computer. I've been going back and forth with him on Telegram, trying to see where he's at. And he is, as far as I know, still working on the issues. So he may or may not chime in to this live stream at some point. If he does, great. Looks good. Why are you trying to butter me up there, 100 Air? But I appreciate that. I do. Anyway, so hopefully Joe will kick in here at some point. Like I said, there is a possibility he will not be here, primarily again because he's having computer issues. He's having problems doing his own live streams, for that matter. It's supposed to be live. He's supposed to be live every day, 3 p.m. So go ahead, check him out. Link to his channel in the description of this live stream as well. Matter of fact, I should say, if you're new here, make sure you hit that subscribe button, click that bell icon, click the all, so you get notified every time I go live and or drop a great video. I'm hoping to drop a bunch of videos as we go through this week, as I head to a conference at the end of the week. And make sure you smash. Freezing up again already. Make sure you smash up that like. I appreciate it. All right. But I want to start out these Crypto Market Mondays with looking at the debt, because I'm sorry, the debt is just out of control. This is when we were live last Monday. $35,171 billion. That was the debt at that time. Okay, that was the debt at that time. I am having some serious technical difficulties right now, so I apologize for that. And let's bring up what the current, are you serious right now? What the current debt is. Sorry, I'm trying to do too many damn things at once. So here we go. Did that come up full screen so you can see it? Yes, it did. Okay, perfect. So right now, 35,260 billion. Like, hello, we're talking, what is that? $90 billion in a week. $90 billion. How is that even possible? Well, I mean, I'm not actually looking for the answer to that question, obviously. But my God, if this doesn't piss you off, if this doesn't make you want to get involved with cryptocurrency, if this doesn't make you want to go out and change the people who are spending money like drunken sailors and not listen to these people who want you to believe that they are, it's corporate greed. And I got some smart friends that really believe that. And I just don't get it. Yeah, I get it. Corporations are making profits. They're supposed to make fucking profit. Sorry, I'm already swearing here at this time of the morning. I apologize. They're supposed to make profits. And if you don't like that, change the people who are in power in Congress who create the tax law to allow them to do that. Anyway, this debt should piss you off. So, happy Monday. Cheers. I need coffee. All right. My first cup of coffee of the day, believe it or not. Okay. Let's take a quick look at the markets. Let's see how these crypto markets are looking today. Overall, they were looking pretty good a little while ago. So let's see if they're still hanging in. Hang on. Sorry. Got to get the right button here. Here we go. Bam. All right. So we got, let me put up the not financial advice. So I say something there. You never know. All right. So we got Bitcoin coming in at 63,860. Not bad. Over the weekend, or as we were coming into the weekend, as I mentioned in the description, Bitcoin started jumping up, went above 60K. At one point, I think it was over 64. We're back down a little bit, 63.8. Still pretty good. 8.6% up over the last 7 days. Ethereum, 27.31, up 5% in the last week. And you want to know what? Still not a bad price. And if you're looking to stack some ETH, my humble opinion, not financial advice, old guy, interwebs. BNB, 563. I love the fact that BNB is holding strong right here. Solana, up 12.4%. It did see a huge boost with everything else here this weekend. 161.11 on Solana. Still not enough for JAR to be breaking even there. Well, 100 Air, I'm glad you're angry, because more people need to be angry about our debt. It's just out of control. And if that pissed you off, I'm sorry in advance, because most of the other stuff I'm going to talk about today, U.S. households losing money. Let's see, major increases in credit card defaults, major increases in bankruptcies, quantitative tightening by the largest central banks. Yeah, that's all going to piss you off too. So I apologize in advance. All right, let's keep going down this list. We'll try and get through at least the top 50 here. XRP looking pretty good, up 2% at 59 cents. You got Doge back up in the 10-cent range here, up 7.4%. Tron at 16 cents. I'm sorry. Tron is just, I should have bought more. I bought a bunch of it because I'm actually doing some transactions on the Tron network, not with the meme coins that is part of what's pumping this whole Tron thing right now, but mostly with USDT, because a lot of the people that I'm dealing with trying to pay with cryptocurrency, they want USDT on Tron, and I don't blame them. The fees are generally low, although right now they're up a little bit thanks to all this meme stuff. 21% up, 16 cents. Let's keep going here. Cardano still just kind of like bleh, even though it's up 13% at 37 cents. Let's see. Oh, what does it say? Solana breakpoint coming in September. Buy the rumor, sell the news. Yes. You might be correct about that. 100 Air. We'll probably talk more about that tomorrow on Matrix Money Podcast. Don't forget to tune in for that on this channel and the Matrix Money Podcast channel. It's going to be myself and JAR tomorrow. FF has another work obligation, so he will not be chiming in with us unless he does it in the chat. So 10 o'clock tomorrow morning Eastern time. All right, let me keep going here. AVAX up almost 30%. AVAX, big mover this in this weekend. 26.62. Link looking pretty damn good. 21% up. 12.25. Bitcoin Cash, you know, I like use it for what it's meant to be used for. Buy shit, save your Bitcoin. 4.8% up at 353. What else we got? Uniswap. Again, Uniswap holding pretty damn strong. I love it. 651, 5.6% up. Litecoin, another one down. Now, if you remember last week, Litecoin was one of the few coins that were up. This week, obviously, it's time for it to pull back down a little bit. And right now, down in the 3.5% range at 64.56. Matic at 51 cents, a great buy, even though it's up 22.3%. And here we go, Caspa. But that might be a topic on tomorrow as well. Caspa almost just under 17 cents, up 7.6%, working its way back up there. Pepe looking mighty good, coming back up 22%. Monero, I love Monero. Privacy coin is going to be huge next year, I guarantee it. I mean, look, all you have to do is look at what they're doing. France just arrested the guy, the founder of Telegram, because why? He won't comply with, giving these governments a back door to the platform. So what do? They just arrest all these people. Same thing, Samurai Wallet. Same thing with Tornado Cash. It's all, they keep going after the founders in hopes that they're going to go and just, crush people to either stop developing or give them what they want. And I'm glad that people just aren't doing it, quite frankly. 100 A saying Ton dropped due to arrest of Telegram CEO. Right. I probably should have. I didn't even think about that. I just blew right by Ton. But I probably should have stopped there. Sorry. But thank you for bringing that up, 100 Air. And I see what you're saying here. He says, I'm adding Ton. Hope it's worth the risk. Honestly, you're probably right. You know what? We'll go back real quick and take a look at that. Hang on one second. Let me scroll back up here. Ton, where are you? Right here. Ton coin. Down 17.6%, 559. I'm honestly surprised it didn't go down more than, well, I guess technically it did do a dip down a little bit further than that. But still, that's kind of higher than I would expect it to be given the arrest of its founder. So, I'm with you. Why not? It's kind of like the whole XRP thing when the SEC sued XRP. Keep stacking. And I know a buddy of mine, that's literally what he was stacking. And he's doing pretty well right now. That's all I'm gonna say. He's doing pretty well as far as XRP is concerned, even with the price at what it is. All right, where were we? Let's scroll back down here. Monero, I think that's where we were. Stellar up 5%, but still looking a bit weak to me, if you ask me. Filecoin slowly coming back up 12.5% and $4.06. What else we got? Hedera H-bar, you know what? It's up almost 8%. Just under 6 cents. And again, I still think, my personal opinion, again, like it says down here, not financial advice, not a financial advisor, old guy interwebs. I think that's a great buy price for H-bar. All right, that's it. We're going to get out of this. Enough looking at the markets as a whole. They're not looking too shabby. The occasional here or there down, depending on what it is that you are looking to buy. So I like I told 100 Air a minute ago. I know I tried to piss everybody off, and then that's my goal every Monday morning now, is to piss you off with the current state of the U.S. debt that is increasing to the tune of $1 trillion approximately every quarter right now. Unsustainable. I don't care who you are, what your financial background is. If you think that's sustainable, it's time to go do some self-checking. I'm just saying. Anyway, so the effects of that are obviously still being felt outside of the government. Well, the government spends money, they just print it, there it goes. But to that effect, let's look at the first thing I wanted to bring up: how U.S. households are just suffering, and we're going to go through. And if you don't follow the Kobieski, wow, I can't say that if my life depended on it right now. Letter. The link is in the description. Go ahead and follow them. You really should. They put out great financial information to help you kind of understand and wrap your head around what is going on in the financial world. You know what? Let me reset this. So there we go. It's a little bit bigger for you. And you still can see my bright and smiley face here. Okay. Anyway. So let's go through this. Households are struggling. Well, yes. And again, in this case, they're talking about U.S. households. I know sometimes, and even on the replay, I might have international people, but I mean, I don't care where you are, you're suffering right now. U.S. household income expectations over the next year have dropped to the lowest level in 4 years. And we're going to talk more about that when we're watching part of Lena Petrova's video at the end of this live stream. Consumers now anticipate a mere 0.8% year-over-year income increase. That's a sharp decline of 2.5% rise that they expected in Q1. Well, I mean, the government's lying about everything. You just had an 800,000 job revision. They lied about almost 1 million jobs. Well, and let's be clear, that revision comes after their monthly revision. So it was even higher than that, but before, we're not quite to that yet. Anyway, over the last 50 years, such a rapid drop in expectations has only been seen during the 2008 financial crisis and the 2020 pandemic. At the same time, Americans' perception of real income improvement is at its lowest point in 10 years, even lower than 2020 during the pandemic. These expectations do not bode well for consumer spending. Well, of course they don't. And I love the graph right here because you can talk about seeing the drop. It's just crazy. It's absolutely crazy. Again, links to everything I'm sharing right now in the description. So you feel free to go ahead and check those out on your own. So, I mean, you don't have to go any further than the grocery store or the gas station, whatever, in order to realize that, prices of stuff is going up. And again, if you listen to the Biden or Harris camp, they'll tell you it's price gouging by all these big companies. The fact that you're printing $1 trillion every 3 months has nothing to do with it. Are you kidding me right now? Yes, it's companies gouging, not you. Holy crap. But again, sadly, there is a percentage of the country, and I don't even get how they believe it, but they believe it. They believe it. They believe the cherry-picked numbers that these people put out there. Anyway, okay, I'm trying not to get down the political rabbit hole. I might be doing a kind of live stream about politics, crypto again a little later this week, but right now that's not today. So let's go to the next thing where we're talking credit card debt. Credit card debt and defaults on credit card payments at, whoops, I went too far there. Sorry about that. At all-time highs. Credit card defaults are now rising faster than the 2008 financial crisis. And he goes to say that the situation is worse than you think. And again, links to all of this in the description, and here's the chart. And I just want to put this out there. I want to put this out there. There's a community note on this, but if you go check the community notes, basically what they're telling you is that this debt is held by a small percentage of banks, et cetera, et cetera. And okay, great, but that doesn't change the fact that defaults are at an all-time high. They just are. Okay, and right here, delinquency rate on credit card loans, banks not among the 100 largest it's size by asset, and that's why you got the community note, because some of the banks are technically included in this chart. But the point is still valid. Defaults all-time highs on credit cards. We know all-time high delinquency rates on car loans, and I'm not even going to show you that. But what we are going to look at next is the bankruptcy filings, all-time high. Like, holy crap, right? Hold on one second. I want to make sure I'm bringing up the right one. I think this is it. Yes, it is. Okay, excuse me. So U.S. Bankruptcy filings hit 6,276 in Q2, because remember, we're in Q3 right now, the highest level since Q2 of 2017. The number of companies declaring bankruptcy has doubled in just 2 years. Well, I mean, I can't see how they can't. How can they keep up with these inflation rates? They can't, and that's what the Fed is trying to do, crush them. That's what government regulation is doing, crushing them. Anyway, again, not to get down that aimless rabbit hole right here, but Chapter 7 filings, also known as liquidation bankruptcies, reached a whopping 3,151 in Q2, the most since the 2020 pandemic. Chapter 11 cases hit 2,462 last quarter, so Q2, exceeding every other quarter over the last 10 years. 10 years. But, you know, if you listen to our government, this is the strongest economy ever. Rawr! Oh, my God. Anyway, furthermore, Chapter 13 and other bankruptcies rose to 469 and 194, respectively. Bankruptcies have been rising at a pace seen during major economic downturns. I love how he's like, do you really think the soft landing is still attainable? Well, hell no. We're going to fall flat on our face. And then, you know, that they're kicking it down the road, and it'll be whoever the new president's that's in office, whether it's Trump, Kamala, whatever, it'll be their fault. It'll be their fault. Yet, look, you can see the rise. Look at this. This chart it's crazy. And obviously, each color represents one of those categories of bankruptcy filings that I was just reading through right there. Crazy. Again, links to all of this in the description. You can go ahead and check it out for yourself. 100 Airs chiming in. The next 6 months or so will tell us a lot about recession or hard landing theory and how crypto will respond. I agree with you, 100 Air, 1,000%. I'm leaning hard landing, and you, in my opinion, are leaning quite correctly. I can't see anything soft the way these numbers are going. I really can't. And, you know, it's funny. I think I'll elaborate. I was going to wait till the end to elaborate on it, but because you brought it up here, 100 Air, you know, how will crypto react to that? And let's be honest. I think that initially, you know, whether you're just focusing on Bitcoin, or the Bitcoin and the entire cryptocurrency space, I think the entire space is going to take a hit. Bitcoin will go down with everything else, which will obviously take down the rest of the cryptocurrency space. And it will go down with everything. It's stock market, whatever, you name it, it's going to take a plunge. The key, in my opinion, is going to be how quickly does it recover. And in my opinion, again, not financial advice, old guy, interwebs. My opinion is that cryptocurrency, Bitcoin and cryptocurrency, will recover more quickly than everything else. We'll see if I'm wrong. We'll see if I'm right. I don't know. Who knows? But I agree with 100 Air. The next 6 months will be telling. All right, let's look at one more thing here. I mentioned that other central banks are starting what is known as QT, or quantitative tightening. So basically, they're sucking liquidity out of the economy. Okay, let's read through this. For the first time in history, the world's top central banks are shrinking their balance sheets. So QT. At the same time, last month, the Bank of Japan announced it would reduce its bond holdings approximately $5 trillion. Now, the Bank of Japan has joined the Fed, the UCB, the Bank of Canada, and the Bank of England in joint liquidity withdrawal from the financial system. So all of these major central banks are pulling liquidity from the financial system, shrinking the supply. In the past, whenever a material amount of liquidity has been withdrawn, I guess I need more coffee, huh? Here, cheers. Markets experienced significant volatility. I mean, I expect we're going to see that regardless, but I can see why adding the increasing pressure of pulling liquidity from the markets in this kind of quantity would increase that. Since 2022, the Fed has shrunk its balance sheet by $1.8 trillion to now holding $7.2 trillion. And the ECB has done $2.7 trillion down to $7.1 trillion. So they're basically on par with the Fed at this point. History says volatility is not going away. And I love that this chart's put out by Bloomberg right now, because, people always complain it's, what the right leaning, whatever numbers, cherry picking. Well, this is Bloomberg. Ain't right by any sense or form of the imagination here. But quantitative tightening, and again, it's very easy to see the downturn from around 2022 to current. Absolutely insane. Why are they doing this? Because they're holding major liabilities on their balance sheets. That's why. I mean, I've done a number of live streams. You can go ahead and check. I didn't put any links in the description this time. Otherwise, my description would be like so big, nobody would read it anyway. So you gotta have to go to like a YouTube channel or whatever, and I've put them all in playlists, so easy for you to find in a playlist. But talking about this now, we all know that the Fed just had a meeting. In that meeting, everybody's saying, okay, the Fed's going to be cutting rates, I like Lena Petrova. I think she's excellent. I think she is able to take these complex issues, make them easy to digest, easy to understand. So link to the video that we're going to watch certain clips from in the description of this live stream. Go ahead and check it out and see if, the whole thing makes better, helps to pull it all together. I'm trying to pick, she covers 4 major points to the meeting and what 4 major points, takeaways from that meeting. So we're going to go through those one by one. I'll give you my proverbial 2 Satoshis. And then at the end, I'm going to try and pull it all together and talk about how it's going to affect the crypto markets. And again, should you be looking to put money into crypto right now? And feel free, jump in the chat, tell me what you're thinking with regard to that. And boy, what is going on? This other computer I got going right now is not liking me at all. I'm trying to balance everything here. All right, but let's get this up and start with this. Oh, wait, I gotta hit the right button. I think it's this one. Yes, it is. All right, we're gonna turn her up full screen here. This first section is about a minute long.
First, following the meeting in Jackson Hole, Fed Chair Jerome Powell said, and I quote, "Time has come for the central bank to cut interest rates," adding that the Federal Reserve does not seek nor welcome further cooling in the labor market. Given the latest downward revision of 818,000 jobs that were reported on paper as jobs gained but never actually existed, which is the biggest revision on record, Jerome Powell's statement seems to be odd, to say the least. It clearly skips over just how concerning the state of the labor market is. Anyone can see it with a naked eye, and any further cooling would likely lead to a full-blown depression. The next Fed meetings are scheduled for September the 18th, November the 7th,
okay, and then I'm trying to stop that, and it wasn't stopping. Sorry about that. So I'll just close that out. Recession is, I'm sorry, it's on the horizon. Frankly, we've probably been in a recession, but the government keeps changing the definition of a recession, so they can say, oh, we're not in a recession now. And yes, 100 Air, I agree with you. Yes, she is definitely pleasing to the eyes and smart to boot. Go figure. Go figure. Again, links to her channel or her YouTube channel in the description of this live stream. Sorry, I'm trying to suck down my coffee before it really gets cold. But here we go. They know it's coming. They know they got to reduce rates. But I'm not sure if it's in one of the clips. I mean, what is that going to do? If you've been around long enough, that means inflation is incoming. Increased inflation is incoming. And listen, inflation rates are not, well, what did it come in at? Supposedly like 2.9% or something. That's bullshit. That's bullshit. It's blatantly obvious that they're not utilizing proper numbers to figure out what the actual inflation rate is. But then again, you can't necessarily just blame the FJB administration for that, because that's been happening now through multiple administrations for decades. So, anyway, but however, I think these guys have taken it to a new level, but that's just me. What the holy hell do I know, right? All right, let's bring up the next clip I have, and let's see if I can get this one right. I don't know. How about this one? Yay, I'm 2 for 2, baby. All right. I'll bring this up full screen. We'll listen to what she's got to say. And like I said, I'll definitely inject in my 2 Satoshis in here.
So what is my take on this? Well, if you thought that inflation has been high up until now, let's just wait and see what happens following those rate cuts.
Exactly.
The Fed is now 100% done.
I'm glad I included that.
Done pretending that they're going to do anything about inflation. Therefore,
I just had to stop that. I love the way she says that. The Fed is done pretending that they're going to do anything about inflation, because they're the freaking cause of the inflation. The governments, the Fed are okay, let's clarify. The government and the Fed are the cause of the inflation. They're the reason we're going up $1 trillion in debt every 100 days. Okay, sorry, not trying to, it pisses me off. It just pisses me off. Okay, let her talk, because I'm sure you'd much rather listen to her.
I would expect inflation to increase. The second and arguably far more important takeaway is that the United States Treasuries, its debt, is no longer seen as a safe investment option. What will U.S. government do as its tax receipts are falling and there are wars to fund abroad? Things are going to get really tough.
Oh, yeah.
Well, historically, U.S. Treasuries have been perceived to be the safest of safe haven securities, of safe haven assets. Backed by the full faith of the U.S. government, the level of trust in them used to be truly unprecedented. However, that is no longer the case. New research that was just presented at
and basically she's going to go into that this research that was done puts us, the US, on par with other countries who have much worse economies than we do. But the reason I wanted to stop at this particular point is if you do not follow, and I didn't put a link to his Twitter or X or whatever the hell they're calling themselves account in the description. I apologize, but I've talked about him several times on several different live streams. Balajee. He actually did an entire article about this, posted it on Twitter, and then there are several other threads with regard to this particular research here. And as he put it in one of his last tweets about this was, well, at least now they admit it. So anyway, I'm sorry. I just wanted to tell you that, and I apologize for not having that in the description. But if you head on over to X and just Balajee, bam, his account will come right up, and talk about great macroeconomic analyst. You definitely want to be subscribed and following him. All right, let's let her finish up at her point.
At the conference in Jackson Hole, concluded that the U.S. Treasuries are now no longer different than those securities that are issued by Germany, by France, or even Great Britain. Considering the economic decline of Europe, that's not really a good company to be in.
Right.
The research examined shifts in investor behavior and found that investors did not, as they had during previous episodes of global financial stress, they did not pile into treasuries and drive up their value by increasing demand. Instead, investors marked down treasury securities, similarly to what they did for bonds from other countries.
Okay, so you get the point. Basically, investors are saying, screw U.S. Treasuries. The U.S. credit rating has already been downgraded. Nobody wants to buy our treasuries. Why would you when you're increasing your debt load by $1 trillion a quarter? That does not even make remote kinds of sense. Hey, Chris Hanley in the house. Welcome, sir. Appreciate you being here. That's right. Better late than never. Yeah, you missed all the shit that probably would have pissed you off, though. So we're just getting to the end of it right now. But maybe you'll go back and watch, because I even pissed off 100 Air. So there you go. Anyway, appreciate you being here, sir. Appreciate it. Anyway, so listen, what did people go into, though? Where did people go? Well, gold just hit an all-time high. Remember, a lot of these boomers don't understand or want to even try to understand Bitcoin and cryptocurrency. So they're going to go to what they know. They're going to go to stuff like gold and other commodities, copper, etc., silver, in order to, try and hedge against this inevitable explosion of the Fed and treasuries in the global market. Awesome. Awesome. Yeah, you're going to want to go back to where I start out about the debt clock and how much it's increased in 1 week. Just saying. And matter of fact, if you wait and come back after, give me about a half an hour, I'll have some time codes in there for you, make it a little easier. Anyway, all right. So let's head on to her next point and see if we can't get that squared away. What about this? Let's see. I think this looks like the right one. Perfect. All right, I'm gonna let her do the talking, and I will put in my, like I said,
the third point that I would like to make in this video is on the Fed Chair Powell's statement regarding the labor market. Powell admitted that, quote, job vacancies have fallen. Well, first of all, the massive 818,000 downward revision that was just announced a couple of days ago, it was in addition to those monthly adjustments that we've all gotten used to.
Oh, sorry. Of course, I want to sneeze right when I'm going to talk. That's exactly what I was mentioning earlier. Every month after they put out these reports that are showing the economy doing so swimmingly, they then revise it down on a monthly basis. But this revision right here of like 800,000 jobs on paper that never ever existed is above and beyond what they've already revised down. So basically, they lied to us. The government lied about 1 million new jobs. I'm rounding off. I could be off by 100,000. Who cares? What's the fucking point at that point? Anyway, sorry. We'll let her again, getting pissed off.
Additionally, as of July, the latest data available, the unemployment rate has increased. But what nobody is talking about, including Fed Chair Jerome Powell, is that
pay attention to what she's about to say, because this is, she's right. No one's talking about it. And if you actually pay attention to it, it should scare you about where the economy is going.
According to the most recent Fed Reserve survey, the number of people who are looking for a job has spiked. So unfortunately, these days, fewer businesses are hiring. As Powell said himself, the number of vacancies decreased. Sure, that's true. But what he failed to include, what he failed to tell you is that it happened while the number of people looking for a job increased to its highest level since 2014. The proportion of respondents seek.
Okay, I'm gonna break that there at this point. So put this into, you know, I guess to the brain, plug it in this way. You got jobs being revised down. So basically you have 1 million less jobs than the government's telling you even exist. And if you remember from the previous revision, 600 was 600,000, if my memory serves, of those were full-time jobs that don't exist. Okay, so full-time jobs down. What jobs are in the economy are part-time jobs. And then you've got an increase in people looking for employment, a spike in people looking for employment. Now, granted, many of these people, it might be a second job because they want, you know, stupid things like food, and they can't afford to work one job and still support their entire family, you know, if you want to eat. Crazy. But anyway, you've got a sharp rise in people looking for jobs. You got a sharp decline in the number of jobs available, and an even sharper decline in the number of full-time jobs available. Companies are no longer doing the hiring they once were after the pandemic. So people who want to work can't work. And when I say that, I'm talking full-time. And you've got people having to either settle for or needing part-time work to supplement an already existing full-time job to just survive. But yet our government is coming out and telling us, oh, inflation's under control, things are just great, but yet you still go to the store and pay $6 for a dozen eggs. No, you've got to be able to critically think about this. And again, please, and if any of my friends are watching this and you think I'm wrong, feel free, reach out to me, because I know you do. You love to tell me I'm an idiot. But anyway, it ain't price gouging. So stop listening to these idiots in the FJB administration, or the soon-to-be Harris, whatever the fuck his name is, administration. And no, it's our government spending like drunken sailors. It's our government continually making the Fed print. And now they're going to go and start reducing rates. And we've been held at rates, like super high rates, higher than we've seen in the last 40 years. But now they're going to start reducing rates, even if it's 25 basis points. What is that going to do? Like she mentioned there, I was hoping I queued it up, but and I'm glad I did. Inflation is going to go even higher. They're already lying to us about it, but now it's going to go even higher. All right, let's get to this last point she wants to highlight, and then I'll wrap this thing up because, like I said, my blood pressure right now. Can you see the veins coming out of my neck right now? Oh boy. Anyway, all right, here we go.
On the fourth and the final observation of mine that I will share with you in this video, the dollar index has declined to its lowest level following Powell's commentary on rate cuts. On the year-over-year basis, by the way, the dollar index declined roughly 10%. Today, the dollar index dropped even more, while gold and 10-year bonds rose. The announcement of the rate cut is clearly seen as overly political. With the real inflation being far above the reported rate, cutting rates now is likely to cause inflation to pick up, while employment has been slowing down considerably.
Yes.
The labor market will likely show further declines, further deterioration through the end of the year. There is a very scary word,
which I should point out is what they want at all costs. Just, again, just to be clear,
that comes to mind when unemployment rises and inflation rate increases. Do you know what that word is? The word is stagflation. I'll go ahead and include Fed Chair Jerome Powell's comments in this video as well.
Okay. And she does that at the end. And so if you want to watch him talking about stagflation and all that kind of stuff, feel free, link to the her video in the description of this live stream. Go ahead and check that out. So now you're probably saying, okay, Keith, this is great. You pissed me off. The U.S. debt is through the roof. Yeah, households are struggling. Central banks are tightening and sucking liquidity out of the markets. Delinquencies are everywhere, and bankruptcies or filings are up through the roof. What's that got to do with cryptocurrency? Well, that's a great question. Great question. Okay, let me pose a couple of questions to you. What does this mean to you with regard to investing in cryptocurrency? Well, to me, I see it as a continued opportunity to dollar cost average into cryptocurrency. And I think that you should utilize this time and volatility to continue to do that. Again, not financial. Where is it? Right there, right there. Not financial advice, not a financial advisor, old guy interwebs. But you know what? It only makes sense to me that you're going to want to be in the hardest asset possible when all this shit starts hitting the fan. Now, does that mean I only invest in cryptocurrency? Well, my answer to that is probably not. Although for me, and again, maybe I'm biased to it to some degree, I think that should be the main portion of what you're putting in, but you should also consider other things. It's funny, I was having this conversation with an acquaintance over the weekend, and he was talking about investing in actual copper, and that he's been buying copper bars, and I think that's great. As a matter of fact, maybe he's watching. If you are, welcome, Nick. It's a great idea. I think copper is going to go through the roof. One of those commodities that's probably a good idea if you're doing, whether you're doing investing into copper in the markets or just like literal copper. I think that is a good investment going forward. Why? A lot of these facilities that still need to be built for AI are going to need copper. Same thing with more Bitcoin mining facilities. That is just going to, the need for that kind of computational power is going to continue. And those facilities are going to require raw materials like copper in order to be to be built. And that will, in my opinion, force the price of copper up. But not just that. Silver, obviously, always good to have some of that. That is like, think of it like Litecoin to Bitcoin kind of thing. And then gold, again, for those of you who know already, I dollar cost average into gold, have it delivered right to my door. If you're interested in learning more about that, link in the description of this live stream. Acre Gold, $50 a month delivered to your door. But anyway, so those kind of things I think are also important. So the next question might be, as it relates to the crypto markets, so does that mean that the crypto markets are going to like hold themselves, not collapse with everything else, or they're going to go up maybe? And as I mentioned earlier, when 100 Air had posted that comment into the live chat, I really do believe that the cryptocurrency market is going to probably go down with everything else, because people are going to panic, people are going to sell, people are going to want to put liquidity in their hands. And the only way that they're going to be able to do that out of cryptocurrency, for the most part, is to liquidate the cryptocurrency. So and other assets, by the way, stocks, etc., bonds. But I mean, it only makes sense. We've seen it happen. We've seen it in 2008. We saw it again in 2020. And you're going to see, I think we're going to see more of that. Let's leave it at that, which then means, okay, cryptocurrency is going to drop. So what does that mean? Does that mean I should be selling with everybody else now before it happens? Should I sell then? What did I do? Okay. Again, where is it? Right there. Not financial advice. Not a financial advisor. Old guy. I wouldn't be selling. I mean, unless you absolutely need the money. I mean, you got to do what you got to do. But I would not be selling. I would be hodling like the diamond hands, baby. And I would be DCAing on the way down. Because I believe, to bring it all back around to crypto, I believe that yes, the cryptocurrency market as a whole will go down with everything else, but it will recover quicker than anything else. My opinion. And then finally, what crypto assets? Well, again, the not financial advice applies, but I think that, yeah, Bitcoin needs to be one of those assets. Not because I'm a Bitcoin maxi, but because Bitcoin right now is leading the way with regard to global adoption of cryptocurrency. And Chris is saying October, November, we will see a different. Yes, you are correct, Chris. I agree. I agree 1000%. And I mean, that's just from once the rate cuts come, and then we see what starts happening with regard to inflation beyond anything else. And I was just about to say this. It's an election year. Look at the markets during a typical election year. Yeah, you're right, which is why we're getting, again, a lot of this rate cut stuff is due to election, it being an election year here in the U.S. So yeah, Chris is all over this. Chris is awesome. Thanks for being here, Chris. I appreciate you in the comments. You're awesome. But bottom line is, I see still putting money into cryptocurrency, diversifying into other things, precious metals, gold, silver, copper, whatever. Even maybe into certain stocks that will probably fare better than others. Those that are related to things like energy, precious metals, mining, that kind of stuff, probably are going to do better overall than most of the market. You guys are always welcome. You are always welcome, my friend. Always appreciate you. I do. Anyway, and then consider, and I know I feel like I'm beating the proverbial dead horse here, but you need to consider being able to be outside of the system when the shit hits the fan. And you need to know how to live on crypto before you need to live on crypto, while you still have the ability to be able to test the waters, to see how things work, that kind of thing. So again, I have an entire Living on Crypto series on the YouTube channel. Go ahead and check that out. And hopefully that'll give you some preparation. Put yourself in a better position when it comes. Because it's coming. Not a matter of if, it's a matter of when. All right, that's going to do it. I've been babbling for about an hour. Again, I apologize that Joe didn't make it today. Again, he's been battling some computer issues. I don't even think he did his own live stream yesterday, but God willing, he'll be able to do his live stream later today. So if so, make sure you're watching his live stream 3 p.m. Eastern time today. Link to his channel in the description of this live stream. And so just to give you a quick breakdown, 100 airs in here. Like Chris says, look at the yes, the same period 2020. Exactly. I agree with you. I agree. But I I don't know. I feel like I need to keep putting it out there because I feel like not enough people take the time to wrap their head around it. And it just, I don't know, just got to keep doing it. And to that end, tomorrow, 10 a.m. live for Matrix Money Podcast. We're going to talk about some of the latest news items. Jar is going to be talking about some of the latest DPIN stuff. And FF is not going to be joining us unless he's able to jump into the live chat. He's got some other work stuff. But I also do have a couple of security-related items that I'm going to try and I probably won't do as well as FF, but I will try and put them out there. So that's tomorrow, 10 a.m. Eastern time. Wednesday, 10 a.m. Eastern. Again, I'll be live here, as well as Thursday, 10 a.m. Eastern time. Then Friday night, 7 p.m., Crypto on the Rocks. And right after that for After Hours. And if you know After Hours, you missed a good one this past week, let me tell you. Anyway, and then I'm heading off to a conference, and I'm going to try and do some videos along the way with regard to that. I'm not sure exactly what the infrastructure is going to be when I get there, so I may not be able to do live streams. I might only be able to record and then edit video. So watch for all that. That's all coming. I'm hoping this week is going to be a very active week and rolling right on into next week. So again, everybody, thank you for being here today. 100 Air, Chris, anybody else I might have forgotten in the chat here. I think it was mostly you guys. Appreciate you. And I know I had other people just kind of watching in the background. I appreciate you as well. Before you leave, make sure that you hit that like button on your way. That thumbs up. I appreciate that as well. All right. I'm heading out. I'll see you tomorrow morning, 10 a.m. for Matrix Money Podcast. Have a great day. Have a great week. I'll see you tomorrow.